here's the thing. This is a $64,000 question. This is the big one that everyone it wants to know and everyone is thinking about. This rally, do you think that this recent rally to new highs is sustainable? And are traders buying the momentum for maybe another breakout to the upside here? What are some key short-term critical levels for the S&P, and what does your gut tell you on all this?
Yeah, listen, we broke it out to new highs. I think we got Jake back. He could talk a little more technicals. The VIX is down to 18. The interesting thing is Bitcoin, to me, really hasn't participated as much in this rally. You hit a low around 70,000. It's up to around 78,000. I would have expected more in terms of from that risk-on asset aspect to it. You have overbought conditions both in the NASDAQ 100 right now and the S&P 500. When you look at RSIs, I think a lot of the good news is baked in the cake here. So we're seeing some action in SPXS, which is our triple leverage bear on this rally this month. And we're actually seeing SPDN get a lot of interest as well, which is our inverse 1X on the S&P 500. So individuals that may want to hedge, maybe looking at it a little longer, it doesn't have the 2 or 3x leverage associated with it, SPDN. So they still have to monitor it daily, rebalance accordingly. But it is a tool that we're seeing a lot of clients use that want to hedge maybe their long exposure right now.
Okay, so a trade up to new all-time highs. Looks like a little hedging going on some of those inverse ETFs. Jake, is that what you're seeing?
Yeah, I don't know of a fund in our lineup that has a better use case right now than SPDN. When you start to trade at all-time highs with hot, RSI readings like Ed mentioned, we're at 73 plus on the SPX and the NDX. You can pull SPDN stops up right behind those highs and protect and lock in unrealized gains. So that's just one name in our lineup that's got a good use case. For your point as to levels to watch, we created a lot of air gaps in pricing on the way up,
Yeah, we
right?
did.
And so those naturally create little pockets of support and resistance. We've got that big one that I don't want to see again between 6750 and 6600. Clear that 7,000 would mark a line in the sand, right? Round numbers for 6,900 if we start to pull back more materially from there. But those little price gaps that we created on the way up, I think, are those micro levels to watch if you see a retrace here off the highs.